International financial analyst Opeoluwa Dapo-Thomas joins us now to unbundle this development. Thank you for giving us your time. From 897 Naira earlier this week to an all-time low of 930 to $1 at the parallel market. What does this mean? This rapid free fall, what does it mean for the ordinary Nigerian?
Well, it means that there's a lot of speculative activity going on, and also we have an issue with supply. So there's really not much liquidity, and then obviously there's a lot of demand restrictions. Obviously, Nigeria doesn't possess such large amounts of dollars that can clear their demand backlog. So there are restrictions, obviously, to how the money is dispersed, and that has created a black market. So the black market price is where you're looking at 950, the real I&E window where willing buyers and willing sellers who have met the criteria for FX receipts is about 790 something or 785, depending on what point of day you're looking at. So we can see that this is a situation that obviously has put pressure on the people. It has put pressure on goods and services. However, we need to understand where we are coming from. So, I mean, the Nigerian government has floated the exchange rates. I mean, the idea was to get a more efficient rate and discover the intrinsic value or the real value of the Naira to the dollar. You need to know in the previous regime, the previous FX regime, they operated a pegged fixed rate exchange rate system. That obviously led to a lot of wastages because we had rent seekers and people making profits from it from arbitrage. You need to understand that the former bank rate was about 460 and black market was about 860 or 850 thereabouts, which created like a 400 Naira margin, which was very, very alluring. Even the Pope would not even reject such premiums. So Nigeria wasted about 8 trillion Naira in the last 3 years. This created a hole of about 17 trillion Naira into the FX reserve. So adopting this floating rate wasn't meant to be a panacea to bring in lower rates. No, I think people have gotten that wrong. We're conflating issues here. People need to understand the duality of events, that two things can exist. One, is it good to float the Naira when you know that you don't have enough FX to supply? Yes. Two, what do you need to do to ensure that, okay, rates are stable, and also to try and even bring down rates? We now have to look at the supply side where oil receipts have to come in, non-oil exports have to come in, remittances has to come in, foreign direct investment has to come in, foreign portfolio investments have to come in. So if we don't make these decisions, then we're going to have issues going forward with the rates.
Okay, just from a layman's perspective, the floating of the Naira at the time of the country's currency happened and everything sank low. Economists and analysts like someone like yourself gave guarded welcome for the new exchange rate unification policy. But was this low a drop expected, and how much lower will it go before some change happens?
Oh, yes, certainly. It was expected because you need to know that we were looking for the real value of the Naira to the dollar. What we had before was an artificial value at 460 Naira to the dollar. What the government was intending to do was to find a real value. And so the devaluation happened. It dropped about 75–80% of the currency. So right now, the idea from the economic team of the president is to say, we still think that the value of Naira is about 700 Naira, which I think represents the real value. What we're just saying now is a lot of speculative activity where that has, put a lot of pressure on the market. And also the real condition is Naira obviously has not been very, very strong on its own. Number one, you need to know that inflation is about 25%, and inflation at 25% with MPR at 23%. But banks rates and even short-term instruments like the treasury bills and bonds are not even up to the MPR rate. So what we're saying is people are not going to save in Naira. People are going to the dollar to hedge against the currency. So there's a dollar demand, which is obviously heavy. I mean, Goldman Sachs puts it about $12 billion. Most people say it's about $10 million. You know, we still owe airlines about $818 million as well. So we have a lot of dollars, people that need dollars. A lot of forward contracts have not been honored.
Right.
And so
sorry to interrupt. We're actually almost out of time, but I need to ask you this one. The independent petrol marketers are already warning of a possibility of another increase in the pump price of petrol. Where do you think this will leave the citizens who are struggling to survive the current situation already?
Well, it's a tragedy that this is going to happen. But yes, fuel prices are going to go up. You know, two things compose of the fuel price. Number one, the cost of oil price in the market, which is obviously going high, with Saudi Arabia adding more voluntary cuts to the market, and obviously this exchange rate, which is used to bring in refined petroleum. You need to know in 2022, Nigeria spent about $77 billion bringing in refined petroleum products into the country. So it's a very, very tough situation for Nigerians, very tough situation for people. Accommodation and transportation costs have tripled, fuel prices have tripled, and at the end of the day, there's no such cushioning for that, which is a very, very sad situation. But we're beginning to see the real value of fuel and the dollar, and obviously this will help in projection and national planning. But like I said, Nigeria has to take their fiscal position first, because number one, they lost about $10 billion with subsidies last year. The country doesn't have that money anymore. They were borrowing actually to even pay subsidy money. As of today, even with the subsidy removed, Nigeria still owes about 2 trillion naira. So I think people need to understand
You're really
that.
painting a scary picture for a lot of Nigerians who just hear you, reeling out figures. We're out of time now, but I'm hoping we can have you on for a more extensive conversation on the implication of this free fall that we're experiencing. Thank you very much, Mr. Dapo-Thomas, for your time.
Thank you very much for having me.